Hello, everyone on YouTube and Twitter. This is the Prospero.ai stock market live stream. We are waiting on George, the CEO, Kalis. He's joining up any second now. So as people filter in, we'll wait for George. I think we may have some new faces here today, as we had a couple social media posts about Prospero's success so far in 2024 and the past performance that we've had 2023, 2022. Which George will speak on more when he gets in here. But if this is your first time watching our live stream, comment if you're a first time viewer right now. I want to see the new faces in here. And I think we might have a few. So let me know if this is the first stream you are attending. And if it is, we're going to cover some good topics today. A lot of cool stuff going on in the market and the business world. Um, And let me know if you're watching on Twitter/X, because I'm not sure if I could see comments through our streaming platform from X or if I just see them from YouTube. So if you're on Twitter right now watching, send a comment, say hi. Hello, Mr. Miss whatever MJR12345. Hello, nice to see you. Good to see you in the chat, in the stream. George is hopping in soon. Hey, Dave, thanks for joining us. Nice to see you. First time in here. Some of the topics we're going to get into today is obviously Netflix had great earnings and their stock reacted well. So we're going to talk a little bit about Netflix. There's a big company reporting after the market today. You guys may have heard of it before. It's called Tesla. So we might look at them in the Prospero signals and how they're looking. Probably towards the end of the stream when we do our model portfolio update, we'll probably touch on Tesla then. We have a story about the most popular YouTuber in the world, Mr. Beast, maybe leaving the platform. Comment if you guys watch Mr. Beast videos. I'm not sure how much of an overlap there would be with our finance audience and Mr. Beast, but he might be signing a deal with a competing streaming platform. So might make a lot of people out there upset if he leaves YouTube. Nobody from Twitter in the comments, or can I just not see them? Let me check our Prospero Twitter, see if there's people watching us right now. Okay, yeah, I see a few viewers on there. If you're watching on Twitter, actually, I don't know if you even can comment on a live stream on Twitter, but try to do it if you can. I want to see if we can interact with the Twitter audience as well. George should be joining any second. He's obviously a busier guy than I, so he cuts time for these live streams. As we're waiting for him, if you have any questions for George himself about Prospero or any other stocks that are, you're interested in the market, you can comment them right now or get them ready. So when he joins up, we can roll right into them. And drum roll, the man of the hour is here,
Oh,
Mr.
damn, I'm very sorry to be late for my new friend Dave. Thanks for coming, Dave. Uh, yeah, for those that don't know, Dave Lauer's company is called Irvin right now. Super cool. I think one of the things that kind of I think the financial world that I would say both he and I are trying to build is one that's a little friendlier, more collaborative, you might say. And in traditional finance, some might consider us competitors. Um, but we're exploring ways to collaborate, and I feel very good about that because I think building a better world and a better financial system that I think a lot of us really want requires collaboration, requires ways where perhaps in past lives and past experiences, how the financial world was set up, people would be antagonistic, competitive. Um, and yeah, uh, I think the world that Dave and I both envision is one where that doesn't exist as much. So yeah, very energized and excited about that, as well as everything that's going on with the
Did we just lose George? What happened there? Oh, he's back.
My I clicked my mouse back as I was trying to pull up the
There we
model,
go.
which normally when things aren't as crazy for me, is something I have pulled up. But yeah, we briefly crossed over 300% in excess of the S&P today. We're sitting at 292% right now. Very exciting. Some great years we've had. This year looks like it might be, even the best. And yeah, we got a lot of other things to talk about. A lot of things that we're building and now, and one of the things that Dave and I talked about yesterday was even ways we can kind of combine our expertise. And he was, his previous life, which I gave him a little bit of a hard time for, and he was a good sport about. Worked 9 months for Citadel. Um, but yeah, I think there's a lot of potential with the products and some of the other partners that we're talking with to do even better than this. And to be a little more specific, some of the stuff that's helping me this year in terms of sector analysis, how we're allocating there. Something just like really simple example of what I did last year, where I always fully diversified sectors. I'd never double up. This year, I've had a lot of success targeting certain sectors based on these sector movements that we're looking at that we're now actually, automating a lot more. And for those, I don't know if anyone caught our X live yesterday or our X, whatever, what space as I guess the official name. But we brought on James Villarubia, who's actually an AI specialist at NASA, or a presidential fellow in AI for NASA. And he was talking about even some of the ways that we're exploring enhancing more than I'm talking about in terms of just like analyzing sector based opportunities, maybe even kind of combo signal value analysis like EPS. I talked about how SPWR, which we added to our portfolio, I got super excited about because I normally kind of stay away from stocks in big growth industries like solar, but I saw that, not only did it kind of pop into our signals as a bad stock, and I'll pull up the letter where I found it. And I mean, for those that get my letter, like I haven't seen, there's a lot of like repeat favorites on or repeat customers, you might say, on that. But the SPWR one um, was the first time I had ever seen it. And so I added it, even though I kind of avoid growth sectors like solar a lot of the times because those can go haywire on you pretty fast. Um, I actually targeted it because I saw, despite it being in a growth sector, it was shrinking in EPS, which is just like anytime you see that, Prospero signals, not Prospero signals, that is always a really great thing to target. Where you have a growth industry, but a company not doing well in that growth industry. Um, so yeah, I think that there's a lot of interesting stuff going on right now. I was a little late, and I haven't even, we got a pretty big Twitter thread going today that has occupied a lot of my time. I'm going to kind of give you guys my live look at QQQ and SPY net option sentiment. QQQ net option sentiment continues to look strong. It's even seeing some higher lows. Damn, it was at 52 at noon. Definitely based on that, going to go more bullish in the portfolio at the end of this. Um, and yeah, SPY net option sentiment. For those that want to see what like a nice lead up on the market is, go in and look at SPY net option sentiment in the graph. You can really see SPY and Prospero. You can really see, especially on that January 19th, 9:40 a.m. data point, how net option sentiment really got out ahead of the market in terms of being bullish. Um, but yeah, market view looking bullish. Going to take look to add a good amount of bulls at the end of this when I update the model portfolio.
That's good to hear. I always like when we're feeling bullish. It seems like throughout these streams in the past like 2 weeks or so, it's been like a flip flop every stream, the way the Prospero signals have viewed the market. So we're kind of seesawing back and forth. But we got a few questions while you were talking. One from Twitter, which is good to see. Looks like people can live comment on Twitter. Chris Hyde is asking if we have a development roadmap out available anywhere.
Oh, wouldn't you like to know that? Us and all like you and all our competitors, Chris. Um, yeah, I mean, we like one thing I really pride myself on is like, I'd say I have a fountain of new ideas and different perspectives and ways that, I think unlike, what most people do traditionally in finance, bring them to you guys instead of trying to make as much money off them as quickly as I can. So there's definitely an internal roadmap we have that you or anyone can have over my dead body. But I'll think about releasing. I'll think about releasing one that's like a little more of the features that we know that we're building that I wouldn't consider to be trade secrets.
George, I don't know if you see the live viewers, but we're at 38 here right now. That is the highest ever. If you like these live streams, please share with your friends, like, comment. We love to see the engagement. We got another question from a name that's I don't know if I can pronounce, but they're asking, do you suggest getting in on each long-term bull signal equally?
Yeah, so I think it's really like that's a great question and one that I get a lot, which is just like there's stock picking and then there's portfolio management, right? And like, stock picking isn't easy, especially for a retail investor. Portfolio management is like degrees harder, right? Because you're talking about the mix, how you allocate. Hey, we just hit 50 viewers for the first time, crossed it. But that gets a lot tougher. What I do say to people, and like, there's a funny story about like how our round actually started. It was kicked off by someone who I actually met through a friend of mine in the hedge fund world. He actually lives in London, and on a trip to New York, we met, and he works for BlackRock and Model Portfolio Solutions, and just like loved the idea from the beginning. I actually started working with him. Maybe like he ended up becoming our first investor in this round this summer. Um, Even though he does work at BlackRock in Model Portfolio Solutions, which I love because that's kind of the last person you'd ever expect to be a stock picker. But we really won him over and converted him. But basically it all started with a similar question where he's like, okay, which of these would you recommend? What would you recommend for long-term picks? And you do have to be a little tactical and you do have to look at sectors because you could very easily find yourself, I would say, with a bunch of tech stocks or sometimes healthcare. Um, in terms of that like profitability upside breakout mix. Because like the mechanics of that are basically, I imagine we have a lot of new listeners today. The mechanics of that are essentially that, when you look at like, for our long-term picks, it's actually upside breakout minus downside breakout plus profitability, right? So upside breakout is more about like just we'll do the streamline view. It's like demand for call options above where the stock is trading in the long-term options markets. And downside breakout is more about puts, demand for puts below where the stock is trading in long-term options markets. And then we layer into both things like price targets, analyst ratings, momentum factors. That is all to say, tech stocks, biotech, look, those are always going to have more people speculating on them. So more options bets, especially long term. So it's going to be weighted to those areas. But that's why you have to look at it. Where say if there's 10 there and like 9 of them are 10 stocks, like no, you don't even want to buy all 9 of those, I should say, and you want to limit. Like what I've actually started to do in my newsletter is I look at it as like 2 per sector, right? If you have like a portfolio of 10 stocks, I would say no more than 2 per sector before you kind of move on to your best ideas or next best ideas. And we have a letter out or whatever, but if you've exhausted the long-term bull list, what I would suggest after that is going to search and look for high upside breakout, low downside breakout, and then search for stocks with high profitability, like I would say above average profitability. So profitability above 50, net option sentiment above 50. Look for those kinds of things to kind of find more bulls and build more sectors. We will start bringing you more stuff where we're going to put the sector, the price, things like that. That's one of our next releases, so you can more easily do that math. But yes, you always want to make sure that you're even identifying the difference between stock picking and portfolio management. Um, and anytime you're thinking about portfolio management, sector diversity is paramount.
So one stock I wanted to make sure we covered today was Netflix because they reported last night. They had good earnings and they gained 13.1 million subs in the last quarter, beating the two prior quarters. They had 5.9 million and then 8.8 million, and all of these are after they've added the I don't know if it's lower or free tier with ads baked into them as well. So they have 260.8 million subscribers. and they just signed a 10-year deal with WWE for the Raw show that they put on. So, what are your thoughts on Netflix? Do you think they can continue growing? They seem to be the king of streaming at the moment, taking over the throne from whoever else in the legacy media world used to hold it.
Well, I would say that um, the big thing that everybody wondered about with them, right, was like if they could get away with this additional streamer thing. And it's actually pretty funny. I share a profile with my sister, and I have since college. And my profile literally says like George, and then in quotes, "Don't hate me." It asked. Um, and that should tell you I've been building that profile for 20 years. So actually, a big reason why I haven't left, and I actually on my like to do list of like long after all this work stuff, it's like reach out to Netflix customer support and be like, hey, I've been inconvenienced. Like I've had to get two-factor authentication with a text message to my sister a few times to be like, hey, I'm locked out of my thing because like I want my preferences. Like that's the big thing. I would pay for a new account in a second, but I want my preferences. And I do think that would be a good idea for them to figure out a very easy way to just like branch off and do that. Um, I think they would get a lot more subscribers that way. Um, but I will say this that it's smart for them. I don't think like there's always just like this like kind of like generic backlash worry anytime someone, changes something like that or but like it seems to be doing well for them. I imagine that's where a lot of their additional subscribers have come from and I'll probably look to add it to the model portfolio when I do this cuz there seems to be every reason to be bullish on it. And I do think they will and continue to be like a streaming like giant and you king or whatever you want to say. And like occasionally here, I love to give stories and talk about just like corporate governance and management and culture and things like that. That's something that I really care about at my company. And like as we pointed out many times at the stream, we've had over 40 people work for equity only for the company. And, a big reason for that, and we've only raised $200,000 to this point. And a big reason, like our product looks way better than that, actually, to a point where someone at TD Ameritrade, when they were shown it by someone that's investing in this round, uh, said, like, when they said, well, are you working on something like this? They said, yeah, but it isn't this good. It was put back to me that like how can you guys build something that they can't? And, um, one of the reasons was we had actually had all these people work for equity, um, and the other reason was that you know, what I'm doing here. Like there is zero information loss between me and retail investors. I spend about 20% of my day just like talking, helping retail investors. So when I'm the chief data scientist, I'm the tip of the spear on the product. When anything gets created for Prospero, it's with a deep understanding of the needs of retail investors and the combinations, the conversations that I've had. And like, to build good things, it's often building what people need, not what they want or what they ask for. And that's a super important thing that I think we do very well, and I'm proud of that feedback loop that I will continue to engage in. And one of the reasons that I do these streams and create more and more relationships with retail investors. But back to Netflix, I'm not done, Stephen. I'm looping back. In terms of governance, what's really cool about Netflix is they set up a system where you create your own metrics to be graded on in terms of your performance. And when you have your performance reviews, you're actually, in a way, reviewing yourself according to your own milestones that you created. These concepts have been worked on, but Netflix is a real innovator in that area. And it is never a surprise to me when innovators in performance management, achievement, their companies do well. That is never a mystery to me. I think that's super important. So, when you're looking at kind of maybe more esoteric reasons to bet on a company long term, and that's why I was like, you know what, I'm gonna add it to my model portfolio today because not the newsletter picks though, my higher conviction picks. I'm not that excited about them because there are aspects of their business that I think is really overvalued and big problems like with content that they haven't solved yet. But in terms of what they do, and I'm checking on their PE ratio um, because that's obviously super important. Forward PE is something that I talk about all the time, and you should never not look at forward PE. when evaluating stock. Yeah, I mean 38.61. That's like about where Microsoft is on 2024 estimates, um, which is something that I would call a little overvalued. And like maybe a similar business in terms of like some of the structures of it, in terms of like entrenched like collections and things like that. Um, but yeah, so we have their achievement. They're also really great with their Rex, machine learning, AI. And some of the things I love, I don't know if anyone watches, um, Black Mirror. It's one of my favorite shows. And as a big futurist, I'm like, man, they got great people working on that show. But they even like joked about their own like recommendation engine and like building things in real time. So I like a company that can laugh at itself too. So yeah, I would say like Netflix is something if you have closer to like 20 longs and you don't have it thrown in there, I say are a good bet. Um, because uh because they do have a really good corporate structure.
Yeah, so building off this Netflix subscriber story, I wanted to bring up another company that has just announced they're going to offer a subscription tier for their service, Klarna, which is a buy now, pay later service. Um, they just announced they're doing a 7.99 per month subscription tier for their users, which I don't know if we're in subscriber mania or what, but like I can't imagine paying to use a buy now, pay later like for a subscription. I don't know what your thoughts on that or like how you view that. What do you think of that?
I mean, I think that is hilarious, to be honest. That it actually just makes me think of like one of my favorite like uh John Mulaney bits, where it's just like he's talking about college, and he's just like, he's sending a letter, you get it in the mail, and it's just like, we want a gift, but only if it's money. And he gets it in the mail and all that stuff, and like he's just like, I don't know what the issue is here. I feel like our transaction was complete. Like I gave you money, you gave me an education. Why are you asking for more money? And like I think of that immediately because I think exactly that when I hear about this Klarna thing, where it's like the loan is the transaction. The loan is the transaction. That's the money you're giving them. To have like a subscription to a transaction. I mean, it's not. I think that college thing is pretty funny and ridiculous. But like that level of insanity is pretty hilarious to me. Where it's just like you have a transaction, they're trying to tack on additional fees to the transaction. It's like, what is that management? What is that subscription fee for? It's like I'm already paying you probably way more interest than you deserve to do almost literally nothing. You want a subscription fee in addition to that? That's one thing where like Wall Street is pushing just like BS onto companies, which push further BS onto their customers. But it's just like, unfortunately, it's like we've talked about payday loans. It's one of those dark things that it's just like it exists. Unfortunately, people because of the economic dynamics that we live in today, need those kinds of things, and people just take advantage of them and leech off the desperation that our society kind of creates and imposes on people, and that's fucking lame.
Well said, sir. We have a question from the same person about your threads. When you make an update with your threads, are you using long and short recommendations, technical, fundamental analysis, or purely AI analysis?
Not sure what threads means.
So I think
Maybe
they're
newsletter.
referencing when they get an update in an email. I think it calls it a thread.
Oh, the chat. Yeah. I mean, so those are two very different things. Like the chats threads, those tend to be exits. Like where I'm just like watching it and I like real quick need to like get out of a position I'm no longer as excited about, or like the price fundamentals, whatever, is going the other direction on me. If we're talking more about the news, I mean, like for the trading letter, I try to be as transparent about that as I possibly can. But you know, that is there's really two prongs to it, and like you'll see me do it in a second. And feel free to answer questions. I'm probably about 5-10 minutes away from doing it. There's two prongs to it. The first is just my market view, which like in the short term, like is pretty much just net option sentiment trend. over the weekend when I'm writing my letter, like one of the reasons I write the longer letter on the weekend is there's like a lot of macro stuff I catch up on that I just need to like a lot of the times I'm reading on Saturdays and writing on Sundays because I'm trying to just like catch up on a lot of the trends that I can't keep up with during the week. But during the week, I'm really just looking at net option sentiment, QQQ, SPY. I'm looking at the trend line, same trend line that you guys all see in the app. I'm literally pulling up the app. That's how I get my like real time market view. And then beyond that, I'm taking that number and I'm saying like, okay, based on that and the makeup of my portfolio, like how like the ratio of longs to shorts, like how much do I need to rethink things? Um, and like for example, I will just I'll give you a spoiler here. Right now, I have 72 open longs in my model portfolio and 52 open shorts. So actually, that's a pretty good ratio based on like what I want. Um, and I can just like give you the number because like as much as like you can say 72 to 52, I can't stress enough. It's always good to reduce these kind of numbers to ingrain them. So that's about a 1.38 um, ratio of longs to shorts. Um, and like I said, that feels about right for how bullish everything is. So there's something that I even just changed by me checking another number, right? I'm feeling pretty bullish, but actually it seems like I'm already as bullish as I thought I should be opening up today, which is great. Always good to know that. Um, so I'll probably be more tactical. Um, if I end up with more bulls that I like than bears when I do the model portfolio, that'll be fine, optimal, even. I will not have more bears than bulls. I will not end with the portfolio becoming like net more bears than bulls than when I started. That I know going in. I'm open to it getting a little more bullish if I see stocks that I feel good about. Does that answer your question well?
While they're typing, we'll start our next topic. So, Amazon Prime Video is signing the biggest YouTuber to their platform. They're trying to steal Mr. Beast from YouTube. The rumor is that he's going to be offered $100 million to make an exclusive Prime series. It's just astonishing that, YouTube creators are getting that kind of money. And also to see Amazon just like continue further their Amazon Prime Video service. They have live sports, now Mr. Beast. What a world. What do you make of this move by Amazon, George?
I mean, YouTube, like here we are right here. YouTube is just like a weird part of our future that like I actually enjoy from my perspective, where it's just like, all right, apparently we all want to get to know each other a lot better and like what's happening in our lives and like just like, more information, more involved, everything like that. And it's funny, like I enjoy it for me, but like looking out on other people, like it feels weird. Like and it's just like there's this like and this is like kind of a different kind of tangent, but my nephew who's about 2 loves this show Blippy, and it is quite frankly the weirdest kind of disturbing thing that I've seen, just because this person that's like I think has a net worth of like over $100 million or something is just acting in a way no one would ever act. And I love kids and I'm very silly around kids, like I'm not making any mistakes about that. But I'm embarrassed by his behavior, even as someone that says that. I'm like, get some dignity and some decency with the way that you're acting. Like, but it's like hilarious. I'm not faulting him for the living that he makes, but like we talked about the topics that I was like, I made this joke to Stephen and I stand by it. I was like, I would actually, and no shade to sex workers, sooner be a sex worker at the same rate than I would act like Blippy does on YouTube. And that is no shade to Blippy or sex workers. To be perfectly frank, I'm just saying I would prefer the sex worker thing. I think that is more dignified than what Blippy does on YouTube.
I'm not familiar with Blippi, but now I gotta watch some clips after the stream to catch up on what's Blippi's
You
outlook.
should tell me if you're yeah, you should tell me if you're still comfortable after like 10 seconds because it makes me profoundly uncomfortable to watch. And like generally it's just like whatever. If the kids like it, like, but it makes me squirm a little bit to watch Blippy. Like I'm just like,
Mhm.
oh my God, this guy. Uh, uh. I'm
All
doing my
right.
best to hide it. But I
Yeah.
think my nephew also knows that I can't hide it that well. I think my nephew knows and is interested in how little I like Blippi.
You know what is interesting though that just popped into my mind? Like, if Blippi is so popular, that means kids absolutely love it. So is it just so strange that kids are like infatuated by it? So there's got to be something there.
Well, it's not strange at all. It's what I'm talking about. It's like kids kids are kind of like silly and don't mind like embarrassing, humiliating themselves, doing whatever. So like if they see an adult do it, they really enjoy an adult that's willing to like act in a really undignified manner. Like and so like yeah, of course they like it, but like the question is why is someone willing to act in that undignified of a manner? I mean, for money, clearly. Like, good for him. Good for him. To be very clear, good for him. Anyone that can make a living in this crazy world that we live in, I'm all for. You do you. No, this is not a takedown by any means. I'm very happy for Blippi, but he also does make me profoundly uncomfortable.
All right, moving on from Blippi, we'll cover a story that we've kind of talked about before, but now it's actually coming into fruition. So, Spotify is going to allow users in Europe to start making transactions within the app, which they haven't done because of the Apple fees, which I believe are 30%. There's a European law that's called the Digital Markets Act that's now allowing, I guess, companies to, you know, go around the Apple transaction routes that they've had app makers use. So, this is starting in Europe, and Apple makes a lot of money off these transaction fees. If this comes to America, I'd imagine it'd be a big problem for them. Not a big problem, but I mean, it definitely hurt for a little bit. So, um, and it's got to boost Spotify too. So can you talk about Spotify and Apple's perspectives on this story?
Yeah, I mean, it's interesting. I believe Apple just like won their court, the case in America. I don't know, like I just say won because I'm not sure if won is the right word to defend their fee, or no, maybe they lost and it was like I don't know the facts. I'm not going to pretend I do. But anyway, I think it like it did create potential workarounds for the fees, and they're already talking about like how like but to be very clear, like they're I don't know if people know the term usury, but it's basically like when you take far more than you deserve, like an illegal and predatory amount on a loan. I would consider what Apple does in their App Store usury. Like they are basically like taking an arm and a leg, like I think a third of like something that they had no participation in. And like to be fair, they do checks on things that provide value to the community for sure. Not a third of the value of the actual app. Um, and like, unfortunately, like, a business like Apple that really does care about their public image. This is kind of what happens when you see them like they're the only Magnificent Seven stock to actually be declining in their core business. And it makes them act a little weird and desperate and like need to hold their ground on this. Because the truth is they should the proper response for a business that cares about their brand, I think as much as Apple does, is to reduce the fee. To like throw a bone to the people that are pretty pissed off about this, the customers that put money in your pocket. But they don't. And that's just really a sign of a sad desperation um, of a company that kind of like put forth the opposite image of that, I would say. So yeah, it's kind of tough to look at. Um, but yeah, I think there's going to be a lot more battles over it. I think there's going to be a lot like, I think that, a company like Spotify has every right to try to get more of their because it's just like to the point about the value of like protecting customers. Like, Apple doesn't need to protect anyone from Spotify. Like they have plenty of resources and plenty of incentive to do those checks on their own where they don't need to protect anyone. I always think of the funny line of like of The Office where like they make the website and like Ryan like up and coming guy takes over the company and talking about how it got like uh infiltrated by pedophiles. And like that's the really funny example of this. It's like, yeah, if you make like a low budget website, like that's what happens. But that is also saying like that is not a worry with the Spotify app. They don't need Apple's like governance to make sure that their their uh their app isn't infiltrated by pedophiles to take the joke to the extreme there. Um, but yeah, I would say that like it needs to happen. It definitely needs to happen more. It will happen more, and I think Apple's got a real problem on their hands if they don't start actually like listening to their customers instead of battling them, which is the cardinal error of any company.
That makes me think that maybe I was thinking it has to be all or nothing, but maybe Apple can try and do something where a company meets a certain threshold or becomes big enough, and they allow those companies to not pay the fee, and then, you get the loudest, most important companies not to complain, and Apple can kinda continue on its path. Maybe that's what they try to do in the future.
Yeah. No, I mean, there's got to be some degree. Like, it's insane that they don't even say like, okay, like we'll cut it down to 25. Like, even if that doesn't end the lawsuits, like some willingness to compromise is not weakness, it's strength. And that's what I'm saying. It's a sign of desperation that you're not willing to compromise. You're not showing strength. You're showing anxiety over your ability to produce revenue to a point where you're throwing a middle finger out of the people that give you money. And as I said earlier about something else, that's fucking lame.
So as we transition to the model portfolio, maybe we could just cover this last topic we have, which earnings are starting to roll in. We have Tesla later today. I'm sure a lot of our viewers are probably excited for that. But I wanted to ask you, like, if earnings come in really strong this quarter, is the Fed's rate cutting path going to be changed based on that new information that we get and how strong business is still?
Um, I think like I think obviously you really obviously am a very big proponent of what you just said, which is that um the rate cuts thing uh is a big, and I talked about this in my newsletter, and I'll even pull up the graph about how like the market is definitely expecting more rate cuts than the Fed is even guiding towards, which is always like really funny when that happens. But like kind of the funny relationship there is like that happened all last year, and everybody was like, well, this is like going to really catch up with the market, and it never really did. Like because people were basically saying it would be a disaster if they weren't cutting rates by the second half of this year. And here we are sitting in a decidedly non-disaster scenario. So you always have to think about that. Um, I would say the difference here is like if we see the consumer credit crunch hit retail, um, which I think to hit consumer spending, which it's got to at some point, like the way these debts are mounting. I have a hard time believing it won't at some point. If we see that and rates are not cutting on that schedule, um, I do think that could be a problem. And I was talking to Xavier, who was one of our a new live stream guests last time. I do one-on-ones for anyone that wants to email. I do one-on-ones where I teach people the Prospero signals to anyone that asks that's serious about being on an investment growth journey that we can help them go on. As I said, that's an important way to spend my time. George at Prospero.ai. You can always email me. Um, I respond to everyone. A little trick I learned from like someone who I really like, a guy who ran product, an alumnus of my school named Jonathan Rosenberg, who said he responded to every email he got from a CMCer. And I respond to every email I get from a Prospero user. And he was like lightning fast. I think he probably sat in his meetings on phone the whole time. Like it was rare if I email him and he'd get back to me within 5 minutes. I don't know how he does it, but he's a machine. I'm not that good. But yeah, I would say it could be a problem. It could be a problem, but like as we always teach, these things are in isolation, right? I think if we see slower rate drops, rate cuts, and we see some, a real hit to consumer spending, um, I think there could be a problem. And one other thing that I conveyed to Xavier today that I want to make sure I convey to you guys on this topic as well. And then I got to move to the model portfolio, but I will hit Spiky Dude's question on the way. We don't have anything else, right, Steven?
Nope, we're good besides that.
Um, is that uh, as much as I like Meta, and even Google now is in my newsletter picks, like if we start seeing consumer spending drop, and consumer spending names that we like, that we target as bears like Wish or Cracker Barrel, or some other ones that I can always let you know if you're curious about kind of like our frequent consumer cyclical bears. Like if you see those stocks start get like hit more than they have, or just consumer cyclical in general getting hit more than it has, um, I would starting to think about like changing your positions in Meta, Google. We really will. Because the first thing that happens after consumer spending takes a hit, the consumer goods, consumer discretionary, right after that is ads. And there's a really easy straight line there. And like obviously ad businesses like Google, Meta, or that's what's next. And there's a really easy straight line there where it's like if people are spending less money, less money are going to be deployed to is going to be deployed to ads. And that's actually in an automated way in this day and age because ultimately like, things like click-throughs, conversions, etc. Like those are dictated. Those budgets are dictated um, with um, those rates, and money can actually be reallocated in an automated way if those rates are changing. So that's something to look out for. Obviously, if you read my newsletters, if you watch these streams, you're not going to miss me talking about that. I'm going to keep talking about it. I'm going to talk about it when I see. But if you're just tuning in today, that's a bit of wisdom I can give you. That's probably going to save you a lot of money. If you start to see, XLY, consumer discretionary sector, Cracker Barrel, Wish, if you start to see those go down 10, 20% more from where they are now, like I would say XLY 10%, maybe 20 or closer to 30% for something like Wish, Cracker Barrel, I would run for the hills on ad-based businesses.
All right, time for the model portfolio. And if we want to answer, like you said, spiky dudes, he's asking about the net option sentiment, how it's calculated.
My first question to Spiky Dude is what hedge fund do you work for? Citadel? No, I'm just kidding. Uh, you and everybody else would like to know how net option sentiment is calculated, but I will tell you the public sanitized answer, as I always am happy to give this answer, because I do want you guys to understand. No, don't go work for Citadel. I could, if you want to work for a hedge fund, I could recommend a better one than Citadel, in terms of how horrible they are. And like, it's kind of funny. Like some people hear me like maybe think defend places like Citadel when I talk sometimes, but I'm not defending them. I'm just telling them to like, face reality and the fact that like, Citadel is, for the most part, and according to what anyone can prove, playing by the rules. Other than the many fines that they get. But it's just like you're not going to get very far about complaining where things are versus accepting where things are. And that's just like a good life lesson. Um, so, um, no, I'll give you the answer. I don't really know what your second question is, Spiky Dude, but I'll give you the answer. And the answer is what we're trying to do is like a few things with the option sentiment. The first is like a lot of options metrics are looking at things like put call ratio, or looking at contracts and open contracts. And not only are those metrics slow because open interest gets calculated once per day by uh, by the regulator, and there's an official number. So even if you're using put call ratio, you're not getting a live put call ratio. And like the difference between ours, which you're going to get one like always like the previous day close, versus ours updating every 3 minutes. There's a reason we use prices instead of contracts, and that's reason one. So we focus on prices. Reason two that we focus on prices is that prices have more truth. A really good example versus open interest in prices of like AMC. I would often see tons of open contracts from retail that like didn't really know what they're doing. That was just like demand, just like going up and up and up for certain contracts, but the price wouldn't move. Why? Because the price is set by institutions. And the price of options is set on institutional risk models and basically bands by which they think the stock could perform. And they just didn't believe the story that AMC would go up as much as, a lot of retail investors who were buying those options did. So the prices didn't move. So those are two big reasons why we focus on price and not contracts. And that's just a general rule. Like anything you're looking at that's like put call ratio, focusing on like contracts instead of price, which is most things I don't care about, and you shouldn't really care about. Also, things like dark pool prints, sweep orders, like the way our technology works is the opposite of that. Like you look at something like an option sweep order, right? And that's basically like when a hedge fund buys like $50 million of a single contract. But the thing is, when you buy a single contract and you send that like sweep alert that goes out by some of these like overpaid products that are basically, as I'm going to tell you shortly, turning you into a hedge fund stooge. Um, they're basically paying a premium to send you that message, that hedge fund. They're buying the ask and it's going up and up and up to sweep that order um, because they know after and they're paying that premium. Hedge funds never pay for things that don't give them a return. So they're actually paying a premium to send you that message because they know you'll follow them. And if you're like right and you're just like that sweep order, um, ends up pushing the price up. Like the problem isn't that if the sweep order goes out or if there's a lot more like bull sweeps than bear, that the stock price will go up. That's not the problem. The problem is it likely will, but you will get out after the hedge funds, especially if you use a broker like Robinhood or Webull that are selling your orders to hedge funds. Like by the time you're even allowed to by the time hedge funds basically decide that they've earned enough from their sweeps, their options, all that stuff, that they've decided to pull out. Um, Even if you send that trade in perfectly, which often you don't, or even if you have even if you have a stop in, which I hope you do, especially on risky options trades, like your execution will be poor. It will be behind hedge funds, and you don't know when they're going to pull the plug. And that's why 90% of retail traders lose on options trades. Because even if you're right and the stock does go up while you own it, it's the exit that's the difficult part. So always remember that. Now, in terms of what we actually do, the main thing, and the story of Prospero is basically like I wanted to give away free technology because I want to earn the trust of retail investors so we can build a better community. We can build a better financial system by sharing alternative data and the benefits together. And we provide the AI, retail will provide their unique data that hedge funds steal from them anyway. Real-time credit card swipes, camera data, satellite information, web traffic. Hedge funds are buying that data. They're using your data without your consent against you. We are setting up a different thing where we will ask you for data and we will put that into our predictions and we will work together to send you the best predictions and get you the value of that. And that's the system that we want to change in the different world that we're trying to build. And I worked my butt off. I haven't been paid a salary in 13 years. I'm actually about to start, probably soon having that end, maybe next month. But for 13 years, I didn't draw a salary, and I put my sweat labor into building free signals because I care about that mission. Um, and what's the important thing for me here? And I'm going to have to get to the model portfolio. I'm going to wrap this up. I'm going to have to do one of my speed updates. Um, what's really important to me there is that uh, we get really clear, timely, because a lot of people don't remember the open interest, timely information about the options markets. And net option sentiment is a live look, net, if more institutions are bullish or bearish in the short-term options markets. And short-term options markets are so important because an institution all day long will buy a stock that they're buying put options more to short. So the stock going up or them buying it or owning it isn't a buy signal. If an institution buys a short-term option, they are betting, they are wagering, they are risking. They absolutely believe the stock. They have strong conviction that they believe the stock is moving in the direction of that market. That's why net option sentiment is so powerful. Um, but so when we look at that, so when we look at demand, and I'm gonna show you at the end of the model portfolio a little thing on Tesla. Um, that is like one of our most popular consistent case studies. Um, that really illustrates the point of how powerful net option sentiment is. Um, but we're looking at things like price, spread, so difference between the bid and the ask, the momentum of those things. What I call is kind of like the opposite of a sweep order, which is like what I call robotic signatures. So instead of what they want you to know, what a hedge fund is like paying additional money, like a sweep order for you to get, we look for the opposite. We look for consistent buys across different strikes, across different expirations. So we're trying to unearth the options pricing information that they don't want you to know. And that really gives a clear answer to you. Net are more institutions, betting their hard-earned dollars unequivocally on this stock going up versus down. That's net option sentiment. that's why it works so well. Not really a whole lot of mystery to that, I would say. Does that make sense?
That was such a good video. It might have such a good answer. It might have to be a video on our YouTube channel, I think, next week.
Definitely should. I'm getting it's one of those things where like, no one's ever going to accuse me of being short with my explanations. Um but I definitely, the more that you say things, the more you end up getting good at cutting to the chase. So I appreciate the live streams for that. I am about to have to do a very quick model portfolio update. I am getting ready to do that. We'll see if I can do it in 9 minutes. I'm probably going to be behind because I am being like so picky on this stuff these days. But we're going to do my best. We're going to do our best. We're going to see how quickly I can do it. We're going to see if I can do the whole thing in 9 minutes. All right. It's not going to help if things keep opening up on my bad monitor. All right. All right. First, as always, thanks to all our new user readers or watchers. We are going to do a quick check for existing positions. Um, and I'm just like doing a quick, and you could always do this. I'm doing a net option sentiment check. And for longs, I am basically looking at, and I'm in shorts here, like I'm looking at for high net option sentiment on shorts. And I definitely see some right off the bat that make me squirm right away. Um, so we are going to go into my technical setup, look at MAXN. Um, that is actually surprisingly bullish. All right, we're just going to leave it at that. Like, that is like just as a general tip, that does scare me. But actually, can you check on net option sentiment volatility, Stephen, on both MAXN and UDR? Because the problem is like sometimes these are just point of in time, and we're not getting a really good reading. That also has a nice 30-minute. We're not getting a really good reading on that volatility. So when you want to update me on those, Stephen, I'd love to hear that. These
Yeah.
things that we're checking are basically like looking pretty good. I do want to check on Pam because I do think I saw that going up today. And nope, back down. Let's check on the 30. Let's just make sure. Nope. We're gonna hold on to Pam now. GLPG, we definitely want to know if it's nope. All right, how about the 4 hour? A little bit, maybe a developing situation on that 4 hour, but again, nothing to write home about. Um, VOH we want to look at. Nope, that looks fine. We'll check it on the 30-minute. No, nothing there. ES is something we always look at. Do you have that EDR or anything for me? Um, UDR. What was the other one, Stephen?
Yeah, I have both. So MAXN is less volatile. Both are on good upswings, but UDR is very volatile. It was at 20 a few days ago. Now it's at like 73.
Okay. Um, I'm actually going to do something that I never do because I do want to hit this deadline, but I'm actually not going to look at exiting any longs. Because actually no, I can't. That makes me squirm. I'm going to do a very quick look at the longs, a quick scan, because I would actually like to get. I'm actually waiting to get an alert for the next net options update. So I'm just going to scan this really quickly. TMO, we want to get out of that. I don't think we decided we were getting out of any of the. I don't know. That's a long. Looking fine on the 15. Definitely want an update on BLK because I have a few. Oh, we might actually get out of BLK. But I do want to look at. Can you tell me what the sector spider is for financials? I want to just do like what I'm doing there, people, is I want to check the financial sector and basically see if BLK is going in a bad direction away from the sector. Because I think the sector could turn around quickly tomorrow. But if the sector's already doing fine and it's just like BLK, that's kind of like an isolated situation, I want to get out of that. So tell me the sector spider whenever you get a chance, Stephen. Um, and then I'm going to start looking at
You want the
um,
ticker?
Yes.
XLF.
Excel. Something else to do.
BLK net option sentiment was hitting a low. If that, since you're talking about it,
XLM or N?
XLF is Spider Financials.
That makes much more sense. Okay. So, yeah, I mean, it's doing better than BlackRock. I think we're going to close out. Um, I think we're going to close out BlackRock. We might look pre-market tomorrow. We're going to look pre-market on that tomorrow. We're not going to jump to any conclusions just because the market. That's just like purely because the market is so bullish. Do we not have a new net option sentiment yet? That's really annoying. All right, I'm gonna tell me what's going on uh with QQQ and SPY net option sentiment.
QQQ is at 46 and the SPY is at 57.
46. Can you talk to me about the trend?
Yes. Back to QQQ. SPY was at highs. QQQ was at 52 at lunch, 46 now. Near the highs, uptrending.
Uptrending. Nice. Okay. That makes my life very easy, Steven. Um, I love when we can just have a little title. That's easy. What is going on? I'm a little disappointed. We're still waiting on these metrics. They're holding us up. But we'll do everything else that we need to do. Um, okay, we're actually not doing portfolio. Actually, we're cheating a little bit. Are we still waiting on this? What? I'm sure it's gonna buzz like right when I do this. But all right, why not? I know this is gonna be annoying, Steven. I just know it's gonna like go off right now. But you know what? Unfortunately, I'm just like I'm not coming back for it. It made me wait too long, and we can't sit around here all day and wait for the metrics to fire again. One of the things that we actually right now sometimes it's multi-threaded and it can get congested. So one of the things that that we're going to do um, is um, single thread it. Um, we might even be able to get every minute on the refresh. All right, this, and then we have profitability, growth. Doesn't look like we're gonna get here in time, Steven, but we're gonna get close. What is going on here? This can't be right. Where's that memo? What the hell? This is wrong. Oh, I see. I see what happened here. Good catch. Oh, this is gonna cost us. All right, there we go. All right, anything looking interesting here? I think we want to add ASML. And I think we'll do Let's make this really quick. I think we might do Molina Health. Oh yeah, definitely. Molina Health, as usual, is just like a letdown. But what about Tesla? I dropped it. I think I might try to add it again. Let's go with the 2 hour. Okay, we're gonna add those two. I think we have 12 here. We're a little behind. Apologies to anyone here. Um, thing. I think it's 12. Yeah. Or that's correctly. Come on, George. Trust yourself. You already know what we're gonna do there. That's done. We know we want to do this. I mean, I could double up on Microsoft, but who's got the time for that? Getting back into Tesla. All right, now let's see if there's up to 2 bears, as we said, that we'd be willing to add. We didn't do. We're going to eliminate the short pressure, but we definitely are going to do this because that is important. Okay, how many do we have here? We have 17. I actually want to start further up because I don't want any of these, but I am interested in some of these others. Oh, God, annoying. I want to check SBC off. Okay, we're going to grab that. Okay, now we're going to stream through this. FBCF. Seacoast Banking. Oh, yeah. Easy, get a little more on the finance, hedge our BlackRock a little bit. Petco. I don't like Petco. Yeah. All right, we might break our rule. Alrighty, I like if we find more of these promising shorts. We always got to be open. Like these shorts look pretty promising, and so no, we're not going to do another finance though. We draw the line somewhere. Yeah, we got some promising shorts. It's nice because it'll like help us risk adjust. Um, it's a REIT. How are you on the daily? Yeah, I think this is good. All right, but we're really like we're gonna really start getting pretty sensitive here. UV excellency, we're in all that blah blah blah. All right, we're gonna skip to the Xerox, which I think we have, but we always like Xerox, yeah, because it's tech and we're always pretty tech heavy, so it's good to like have more hedging there. Where is like the American SRC? I don't know what's going on there. We don't have time. All right. I don't think we want more finance anyway. This could go either way. With the two. Yeah. Like that. Yeah. We like, ultimately we changed our minds. Because but I will look at I don't mind balancing it. I might double up on Microsoft if that looks good. It's not looking great on that. What about the 15? No. 15. I could also look at Nvidia. I think we're single in Nvidia right now. Also no. Um, no, I think we're just gonna print it. We're just gonna print it. Who's got the time to not print it? And we hate being behind on the time on this one. All right, adding long. we'll let ASML have to, just to balance it out a little more. All right, we got that. Okay, blah blah. That's the right date, 24. I think we're good. Um, I appreciate everybody that stuck around with us till the end. Um, I will just like kind of throw in a quick, like at least shot and explanation of the Tesla thing that I talked about. But one of my favorite stories is this because we talk about how net option sentiment can lead, and I'm going to do this as fast as possible. Um, One of my favorite parts of the story. Shout out to Trader Nate, who I'm going to mention in this. I think it's like at Trader Nate on Twitter. um, when I added Tesla, you could see how like blatantly obvious some of this stuff is sometimes. Like you see the net option sentiment thing trending up. I saw this higher low and it fixated near 100. I like and like just to be clear, we have 2,000 stocks in our universe, and net option sentiment is super volatile. So for something to just be locked at 100%, it's no wonder that Tesla went up this much. And it's just like things are blatantly clear in Prospero. And the perfect example is what you saw here, what I saw here ultimately, which is a second very similar higher low before like fixating near the top of our scale again. And what I love about this story is Trader Nate came to me and said, "Hey, I think Tesla's doing exactly what you said talked about it doing before again." And I even shrugged him off. I was like, "Ah, no, Tesla runs high. Like, don't worry about it." Like, and then a week later, after I had like could have made 15% more on that trade, I was like, "Nate, you were right. I should have listened to you." So that's the power of Prospero signals right there. Sometimes they know better than me, that has designed them, and I love that about it. And one more thing that I'm going to show, like in terms of like this, is like the old buy on the rumor, sell on the news thing. Actually, you could see on July 3rd, what we actually see, and like in how what I was talking about in their design, you can actually see here how like there was a big deliveries announcement on July 2nd, and you could see the sell on the news July 3rd. You can actually see institutions filing out immediately on their short-term options bets and moving them into their long-term options bets where upside breakout picks up one more, and then I absolutely have to go. You can actually just see like exactly what I'm talking about. If you look at the time series, and I encourage everyone to look at this stuff, time series graphs on the stocks, like there's a really cool, as I mentioned, leading signal on SPY today, where you can see in that graph how SPY and option sentiment went up ahead of the market, and just can make it blatantly obvious for you sometimes. But yeah, same thing. In a couple day span, you can see our net option sentiment getting out in front of this price movement down, 20 days after, that example that I just showed, and then right back ahead of it curling up. That's the power of our metric. I got to go. If you have more questions about this, please come next time and ask them to me. All right, I'm out of here, Stephen.
See you, George. Goodbye to all of our viewers. Thanks for watching. See everybody on Monday. Um, Tesla is down after hours if anybody's interested. They just reported earnings, so go check that out. See everybody next week.